We have some pretty big news today from Elon Musk. Elon indeed confirms that he is currently working on Tesla's master plan number 4. He says it will be epic. This post on X has been viewed 54.3 million times in about 12 hours. So it seems like a lot of people are waiting for this. Now that Elon's compensation package has passed yet again, I think you're going to get a pretty epic master plan. Something even better than what we've seen last year. So why is Tesla's stock down almost 2% today? Well, we'll go over it. So why is Tesla's stock down almost 2% today? There's really two things to note here. Number one is Tesla will offer stock options to employees who demonstrate exceptional performance, Reuters reported on Monday, citing internal communications and unnamed employees. Rewarding employees stock options is dilutive to shareholders. Let's be honest, it's minimal at best, but it's still dilution. From my perspective, letting employees know if they go above and beyond, deliver good results, that they can get extra compensation usually incentivizes better work. So that dilution could come with a benefit. But this is a to be continued kind of situation because we don't know exactly what is being talked about here. Like how many stock options would be issued. This is typically not a big problem for companies. Companies do this all the time, unless you're a company like Snapchat and you pay pretty much everyone in stock options. And on company earnings, it will be called stock-based compensation. The other piece of news that could be sending Tesla stock marginally lower today is this. Tesla has reduced the price of the Model 3 rear-wheel drive and long range in Canada by 1,000 Canadian dollars. Again, this is really not a big deal because Canada is not a large market for Tesla to begin with, but it's still one of those headlines that, well, gives the algos a reason to sell off Tesla stock. I would actually say the biggest reason why Tesla is selling off almost 2% today is this continued performance from Nvidia that is up almost 3% today. When Nvidia is moving up tens of billions or hundreds of billions of dollars in market cap value almost every single day, at least that's how it feels, where is that money coming from? It's not coming from cash on the sidelines just yet. It's coming from other areas within the market. So other big tech names, names that people don't want to own as much, like a Tesla, just get drained of liquidity. And we do see this direct correlation between Nvidia stock being up, 2 to 3% today. Nvidia's up almost 3%. That's a pretty large move for a company the size of Nvidia, and Tesla being down on the same day. They have been inversing each other for quite a while now. And surprisingly to some, we actually have some good news today for Tesla as well. Tesla announced today that they have begun deliveries of the updated Model 3 performance in China. And the Tesla Model Y has once again been named the #1 most American-made vehicle in the US by Cars.com's 2024 rankings. This includes EVs and gas cars. The Tesla Model S and Model X also made it on the top 10 spots at number 4 and number 9 respectively. As Sawyer Merritt says here on X, Tesla's Master Plan Part 1 and Part 2 were cars, or about cars. Master Plan Part 3 was about energy, and Tesla's Master Plan Part 4 is likely all about AI, robotics, and robotaxis. Tesla China registered 2,500 Model 3s last week, which is down from where you were towards the end of December of 2023. That's down from the week of May 27th through June 2nd, where you hit 4,800. The week before that, you were at 5,400, but still a pretty solid number overall. It definitely could have been worse. Another reason Tesla stock may be trading lower today, although I don't think it's the biggest drag on Tesla stock today, I think Nvidia is by far the biggest drag on Tesla, is your weekly insured registrations out of China. They came in at 11,700. Last year, you were at 14,500 for this same week. And the year before that, back in 2022, you were at 17,949. So 3 years of a decline for this specific week. Obviously, you can't draw too many conclusions based on just 1 week of data, but it doesn't look great. Like, investors would have wanted to see that number come in higher than that. Electric vehicle startup Fisker has filed for bankruptcy after discussions with a major automaker about an investment that ended without a deal. Chuck Cook on X says, I just saw one of the Tesla ADS operators driving turns in my neighborhood. Wasn't my turn either. So it's good they are doing all the variations. This probably means V12.4.2 in a few days. Elon Musk responds and says there are meaningful improvements to 12.4.2. And some of the big news that was reported yesterday, Tesla China will receive FSD approval in another region following Shanghai. And that was one of the big reasons why Tesla stock was up over 5% yesterday. Also worth mentioning, again with this correlation between Nvidia and Tesla, Nvidia was down 0.68% today. That allowed Tesla to outperform. Now Nvidia is up 3.2% today and Tesla stock is down 2%. We will talk about this a little bit more in the next video, what this could ultimately mean, why Tesla and Nvidia are so correlated, and when could Tesla actually rally big time? Because I actually think Nvidia has a lot to do with Tesla on a cycle basis. And that's because Nvidia is sucking the life out of other areas of the market. And there's just not a lot of capital out there to help push up Tesla and Nvidia, both very large market cap companies. Carl from CNBC posted this news. Bank of America's June fund manager surveys most bullish since November of 2021, driven by cash levels at 3-year lows and big equity allocation. As a lot of people point out in the comment section, 2022 turned out to be a real, quote, dinger, and November of 2021 was the top. Could this also be a top for markets? We'll talk about that in the next video. Fed Williams spoke today. He said the US economy and labor market are strong and inflation is coming back to the Fed's 2% target. He expects inflation to keep coming down throughout this year. Fed Williams also said today that he believes inflation is coming down to the 2% Fed target, as recent data has been encouraging and 3% inflation is not the new norm. Let's just be honest, the Fed is behind the curve, they're going to make a mistake, the economy will weaken too much, and markets will crash. That at this point, you couldn't convince me otherwise on. There is just way too many problematic signs in the economy for things to just get better and the Fed to be correct with their soft landing. I mean, the Fed's talking about maybe cutting rates this year as the unemployment rate is probably going to go much higher. And the Fed's not going to want to cut rates until it's far too late. So is it too late right now? Maybe, maybe not, but that's if the Fed was already cutting rates, and doesn't look like that's going to happen for a long time. Today, we had retail sales month over month that came in at positive 0.1%, but last month was revised from 0% to negative 0.2%. So you're actually negative on retail sales for the last 2 months now. Estimates were for a positive 0.2%, so you came in lower than the estimates there. If you look at retail sales excluding gas and autos, that was revised from negative 0.1% last month to negative 0.3% last month, and your number for this month came in at 0.1%. If you look at retail sales excluding autos, that was 0.2% last month and was revised down to negative 0.1%, and this month's number came in at negative 0.1% as well. So you are negative now. The last 2 months, of retail sales. Industrial production came in 0.9% month over month. Last month was 0%, so a pretty good number. You were expecting 0.2%. Business inventories month over month also came in at 0.3%. We were expecting 0.2%. This did lower the Atlanta Fed GDP projections from about 3.2% GDP for Q2 down to about 3.1% GDP for Q2. BMO said today, U.S. retail sales are visibly downshifting. Today's report, along with softening labor market indicators, adds to the evidence. This should continue to put downward pressure on consumer price inflation and keep the door open for a September Fed rate cut. And Charlie Bellilo on X gives pretty good perspective to retail sales. He says U.S. retail sales increased 2% over the last year, but after adjusting for higher prices, they were down 1.2%. Both of these numbers came in well below the historical averages of 4.6% nominal and 2.0% real. The US consumer appears to be pulling back. Over on StockTwits, sentiment today for Tesla is bearish at 38. Yesterday, it was neutral at 48. Message volume today is a little bit higher than it was yesterday. Yesterday was at 51. Today, it is at 57, which is considered high. The participation ratio today is high at 55. Nvidia, yet again today, has passed Microsoft in market cap to become the most valuable public company. At the same time, lots of Nvidia insiders are selling a lot of stock, including Jensen Huang, Nvidia's CEO, that just sold $31.2 million worth of Nvidia shares. If we take a look at Google Trends data for Tesla over the past 5 years, it's just obvious how much demand you have probably started to see pick up in Tesla ever since about late February. So really to start Q2, you've really seen those Google Trends numbers start to curl upwards. Now, we'll see if that leads into better deliveries or not, but what I can tell you even right now is Google Trends data continues to look better and better. The Cybertruck going from 74 to 80, the Model Y going from 29 to 30, the Model 3 going from 24 to 28, and some of this could be due to the performance version of the Model 3 that was just launched. And also that the Model 3, some of their variants now qualify for the $7,500 federal tax credit. Here today, institutional investors are pretty neutral on Tesla. You can see 3 different trades totaling $323,000. With a positive order value of 49%. Now, that's not all of the trading activity. Those are just some of the trades that are being flagged by the scanner here. You can see a June 21st 185 call for 394,000, a July 19th 180 call for 924,000, a 180 call for June 21st worth 395,000, right? August 16th 220 call worth 130,000. So not all trades get picked up on that scanner, but the ones that are pretty neutral. You can see today volume to the call side expiring by this Friday is 58.43%, and volume to the put side expiring by this Friday is 41.5%. Open interest on the call side is 63.79%, and put open interest is 36.21%. So it looks like on an aggregate overall basis, if you include retail investors, money managers, hedge funds, institutions, they are pretty bullish on Tesla throughout the rest of this week. And it looks like shorts continue to double down on their short positions. You have covered shares today of 1.81 million. Shorted shares today, or borrowed shares, of 3.3 million. That means on net, about 1.5 million shares were likely sold short today. Cost to borrow fees, about 6%, also shows that, yeah, there's quite a bit of demand to short Tesla right now. Short interest or free float still sitting near multi-year highs at 3.65%. $18.95 billion currently sold short in Tesla stock, and still about 101 million shares that are sold short. Google Trends data for full self-driving falling a little bit today, from 23 down to 22, but still very healthy levels of search trend activity for full self-driving on Google. Tesla continues to run about 4,000 different ads with Google, and Tesla's global inventory numbers shooting down sharply today for the Model 3. That may be a good sign of demand coming in for the Model 3, correlating that with Google Trends data that is rising for the Model 3. Overall, could be painting a pretty good picture. The Model X inventories at about 4,200, Model S at about 3,500, and again, the Model 3 at about 2,500. The Model Y inventories are shooting up a little bit from 5,400 up to about 6,300 today. 10-year Treasury yields are trading down about 6 basis points today, largely because of retail sales coming in weaker than expected. Currently, markets are actually pricing in the first Fed rate cut, September 18th, 2024. There is currently 61.1% odds of a rate cut coming September 18th, and 32.3% chance of a continued pause. There's actually a 6.6% chance of 2 rate cuts by September, so that would be a cut July 31st and a cut in September. Current odds for a cut July 31st are 10.3%. The odds of a continued pause, 89.7%. What could flip these odds to start pricing in a greater chance of a cut coming July 31st is that jobs report coming out July 5th. You also get some PMI data that comes out this Friday and a lot more data throughout the month of July, including another CPI report. So if inflation falls in the next CPI report, the jobs report shows another uptick in unemployment, which is what I'm expecting, and overall weakness in the jobs market and or the economy. At the same time inflation is falling, it is possible you could start pricing in a cut by July 31st. And unfortunately, I'm not convinced that would be a good thing for stocks at this point. But we will have to wait and see. As far as Tesla stock specifically, as I mentioned in the last video, you wanted to watch this trend line to see if you found support there. We indeed did today. You fell under this at one point. You have retraced and now you're back above it. And maybe you're going to trade between 188 as resistance and this trend line around the 183 level as support for a period of time. And, I guess the question is, do you break above 188 and continue higher, make that run to 200? Or do you break down and make a down run again down to about 178? Not exactly sure. It's going to depend on what happens with Nvidia over the next couple of days, what happens with the broader markets over the next couple of days, and whether or not we do get more Tesla specific news. We do have Tesla's Q2 delivery number coming out on July 2nd, and that will be the next big catalyst for Tesla. So let me know what you think about this information down below in the comment section. Hit the like button as well as subscribe to the channel if you have not done so already. If you like markets, you like staying informed, or you're all in on Tesla and you want to know what's going on with Tesla each and every single day, hit that subscribe button. If you guys also want to come trade with us live in real time, check out that link down below in the description of this video as well. I gotta say, I'm still pretty cautious about markets, and trust me, you do not want to miss the next video coming out at 8 p.m. Eastern Standard Time here on this channel. You guys enjoy the rest of your day. I will see you in the next one.